Cancellation of debt. All right. So, classic example of this, let's say you owe the credit card company $10,000 and you negotiate with them. And instead of going to bankruptcy, they just say, all right, fine. You don't owe us 10,000 anymore. You can just pay us 8,000. So you just got $2,000 of debt canceled. The treatment of that for tax purposes is as if the bank handed you $2,000 in cash and you earn that money and you're taxed on that money. And then you use that money to pay down $2,000 worth of debt. That's the treatment. So even though you didn't use $2,000 of your own money to reduce your debt, you are taxed on that $2,000. That's a prelude before we jump right in. Now we'll obviously jump right in. So cancellation of debt, this occurs when a lender forgives or cancels a portion or the entirety of a borrower's debt. So this could be anything, whether it's a credit card company, lender, just any sort of creditor in any situation. The IRS typically considers the canceled debt as taxable income for the debtor, as it's viewed as an economic benefit received by the borrower. And God forbid you get an economic benefit that you're not taxed on. The rationale is that the borrower has received funds without the obligation to repay them, which effectively increases their net worth. Now, there are exceptions where the cancellation of debt is not considered taxable income. If we get to bankruptcy, we've got a whole lesson on that. So obviously that's got a whole other set of rules. So if the debt is discharged in bankruptcy, it's not considered taxable income. And like I said, we've got a whole lesson on that. So there will be lots of different treatment for everything there. Insolvency, very similar situation to bankruptcy. I mean, we'll deal with bankruptcy and insolvency in that lesson as well. Certain student loans, gotta love it, always making these an exception. If student loan is forgiven due to the debtor working in a specific profession for a certain period, the cancellation may be excluded from taxable income. And then mortgage debt forgiveness, in certain circumstances, canceled mortgage debt on a primary residence may be excluded from taxable income. However, good general rule, just if you have cancellation of debt, that is taxable. So imagine that John has credit card debt of $20,000. Due to financial hardship, he negotiates with the credit card company, and they agree to cancel $10,000 of his debt. In this case, John would have to report the $10,000 of canceled debt as taxable income. Not that this would be even risky financial advice. I just recommend if you're ever in a lot of debt to a credit card company, just go up to them. Doesn't hurt to ask. The worst they could say is no in terms of negotiating a less amount or maybe a better interest rate. I don't feel bad saying that. Go try to negotiate. Never hurts to ask. Suppose John's taxable income for the year, excluding the canceled debt, is $50,000. Now, with the $10,000 of cancellation of debt income, his total taxable income would be $60,000. If John falls within the 24% tax bracket, his tax liability for the $10,000 of canceled debt would be an extra $2,400 he'd have to pay out. I mean, pros and cons. Better than if you had to pay the full amount. However, if John qualifies for one of the exceptions mentioned above, he may not need to pay taxes on the canceled debt. For example, if John was insolvent by $12,000 immediately before the debt cancellation, he could exclude the entire $10,000 from his taxable income, as the exclusion is limited to the amount of insolvency. Not bad, not bad.
Hey there! Are you ready to not only pass your CPA exams, but truly understand and enjoy the material while studying? I know it seems impossible, right? Especially to enjoy the material? We'll do it together. Tap into the power of CPA.examprep.ai, where we've got personalized quizzes, multiple choice questions, memorization guides, flashcards, simulations, all tailored to your learning. Our adaptive study planning puts you on the fastest path to success and lifts you back up if you fall behind. Avoid wasting your precious time and money attempting an exam with a low chance of passing, because who wants that? We want to get you through this process as quick as possible. Our exam readiness prediction lets you walk in with confidence, knowing that you're prepared for success on exam day. Thankfully, there's no payment method needed to get started, so why don't you come join us? Visit cpa.examprep.ai and let's achieve your exam success together.